Today, we'd like to talk about US earning growth expectations. Financial markets have just entered Q4 earnings season within the US. And what this allows corporates in the US to do is provide investors with an update on how they've performed in that previous quarter. So that mainly comes through in the form of revenues or sales reports, and also how profitable those companies have been. But it also allows those companies to provide investors with more information. So that could be financial statements with updated balance sheets and cash flow statements, etc. And it also allows those companies to provide markets with an update as to what's coming in the future. So that might be ideas around changes in pricing, changes in costs to the business, looking to increase staffing levels, or announcing new products that they're looking to bring to the market. And that part of earnings season can be more important to investors than actually what is being delivered in the previous quarter, looking forward to the future. Now, if we do that ourselves and look at what markets are currently expecting to see from the US, we can see that within this current quarter, they're expecting earnings growth to fall by 2%. And then the following quarter, that's expected to flatline, and then into the final two quarters, where in each of those quarters, the market is looking at earnings growth of about 6%. And why does that happen? Well, we know that when companies speak to analysts, they look to lower the expectations at the start of the year. And that just allows companies a better opportunity to deliver more consistent earnings, up surprises and sales surprises. So delivering above the expectations of the market. And we really see that within the current estimates, with it being lower in the first half and higher in the second half. So what does that mean? Well, at an aggregate level, the market's expecting US earnings growth to be about 10%. And a real fundamental driver of that is the robust GDP growth that we're seeing within the US. If we compare US earnings growth of 10% to other developed regions, we're seeing a big divergence. So for example, the UK, that's expected to do about 2% earnings growth. Europe and Japan is expected to do about 3% each. And emerging markets as an aggregate measure, we're looking at about 8%. So it really underpins the importance of US GDP growth feeding through into earnings growth. And once again, earnings growth is important to equity markets, particularly in the US at the moment, given we know that US equities are trading on high valuation multiples. So for those equities to actually deliver positive returns for markets, that is primarily going to have to come through earnings rather than seeing multiples move higher from where they currently are. So please keep an eye on the videos, and we'll continue to provide you updates from the US.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value, and you may get back less than you invest.